Welcome all subscribers, all inside technicians to tonight's Nightly Market Intelligence Report. Today is September 30th, the last day of September 2013. The time is 7:36 p.m. Eastern Standard. The U.S. government is on the brink of a shutdown, and I think that by finding, tracking, and trading the smart money, it's pretty obvious through all the market turns that can be identified as they happen in play, that most of the information that is being broadcasted out, whether it's the financials of a company or overall general news such as the most recent brink of a shutdown of the United States government, is all evident within the price action as the market discounts in advance what the future holds for the world as we know it out of U.S. territory. Tonight, the smart money bias market trading call remains at a short level 8. And just because of the overnight session in the last report, we changed our bias from a short level 7 to now a short level 8 with a greater level of strength to the downside on this trend continuing to move down as prices sell off pretty sharply, especially today was a big sell-off day, and the Dow closing down at 15,129.67. Now, as we look at the indicators, it's clear to see that across the board, the MACD, after crossing just 2 sessions ago, the disparity, meaning the difference between the MACD and the signal line, is getting wider, adding to the strength of the downtrend after the final confirmation to go to level 8 as well. Here, money flow index, more negative momentum, more momentum to the downside. And here as well on the EMAs, and here again moving to the downside on the Stochastics Momentum Index. And here down again on the Chaikin money flow, longer term perspective behind what smart money is really up to. Short term, advanced decline oscillators completely bottomed out. Where will this market go? This remains to be seen, but we do have clear-cut support levels that are laid out here, 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 and here. As these prices continue to trade down, as we always do, we will have these levels laid out for you in advance. Now, what we're talking about is a change from a support to a new resistance level, and this is just of tonight's broadcast, this new intelligence, where we have had sufficient closes below this level. What was once support here at 15,312 and 86 has become resistance. The support level below that at 15,194.13 still stands, penetrated today and closed down way below the low of today's session. In fact, came very, very close to 15,194.13. I really believe that this is a high possibility for tomorrow, if not on the outside the next trading day. Again, closing today at 15,129.67, way below 15,194.13. No resistance to get down to this level right now. So those are the absolute levels on the Dow Jones Industrial Average, using this index as a proxy for the equity side and analysis of the current state of the U.S. markets. It has been a very long day, traders and investors, and we've had a lot of trading across the board here that has taken place today. So let's keep moving. We have a lot of information to get to here and get it all across to you so that you can use it. Here on the S&P 1500, 10 sectors, and the corresponding highly correlated ETF symbols, we are still short XLF out of the 40 financial sector, and this will remain so until we hit a definitive price profit target in the near-term future. Here we are again. We remain short on 10 energy and the ETF symbol XLE, traded against this beautiful down day today, closed down at 643.65. We are accumulating quite a bit of points across the board here, as we did on the way up. This was the largest winning 2 weeks in the most recent history of the report outside of this time period here, picking up well over 100 points in just 2 trading weeks. So here on 25 consumer discretionary and XLY, We are short tonight with a stop in place if this turns right back around. What's amazing about this on consumer discretionary is that prices really aren't moving down like the market is. In fact, they're opening and closing up. Very unusual. What this means is that with this type of positive relative strength, the strongest out of all the sectors, there's no doubt in my mind if the market cuts us a break and get a short-term correction to the upside, this should take off, and maybe that would be good for 10 points. We'll see how that turns out. Here, 35 Healthcare and XLV. We are short again tonight. Excellent trade in play. Here, we're on the sidelines here. What is unusual about this particular pattern, we were going to trade this short out of it to the downside, is that we have an up close. And up close at 216.86 versus the market closing down, bulleting down. It doesn't make any sense to trade it short, does it? No, it doesn't, because it has positive relative strength. So what could the move be? From our perspective, not much. It's not worth the stretch. Let it go. Find something else. So because of it, we're on the sidelines here. Short, brand new trade tonight, 45 Information Technology and XLK. We talked about this, likely to be short on the AM session on the 29th, last night's report. Today's the 30th, and we've made the move. Looking to get to here, depending on a market sell-off, possibly here. And here, look at the best trade so far in 30 consumer staples. The ETF symbol XLP is rocking to the downside, closing down on the SEC 431.46 for the day. Look at the move in 1, 2, 3, 4, 5, 6 trading days. Incredible. Short again tonight. And next, on 50 materials, here we are with XLB, and we've gone short today in the brown no call after we talked about this last night as well. So there we have it. Although we have high volatility, nothing to lose by going short and seeing what happens out of this. And here, 50 Telecom, XTL, we remain short. Beautiful trade in here and gap down. The relative comparison between the in and where we are right now is not a lot points-wise. We picked up a short and got out here with 7.5 because the numeric value is very, very low. However, it is what it is, and it is a valid trade. 20 Industrials, short just on the other session on last night, and report, and here we are closing down 428.36 with an excellent entry right here, looking to get back down to here if the market sells off that far. Brings us right back to financials, and that's it for the S&P 1500 10 sectors and the corresponding ETF symbols. Let's get right into futures. We have a lot of information yet to cover with 3 trades we took today in real time. Here we are. The current contract month being traded in the S&P Mini Futures December 2013. We had some significant volume that came in today. Here, above the 21 period average daily volume, that's the first volume spike that's beat it to the upside for the past 8 sessions, so that's positive. Again, for those of you that are fast forwarding, we are and remain at a short level 8 to the downside on the smart money bias market trading call. Here on the next chart, as you can see, continuing to the downside on the SMI, more disparity, the wider of the two between this and the Dow equities, indicating downward future is in play. Here we are looking at a trend line here at this point, certain price level at 1660. See how prices will hold this or break through this from a longer term perspective. And here, more downward movement out of the money flow index. What is odd here is that we do have some upward movement out of the longer term check-in money flow. So as this moves up and everything else bottoms out, it is possible still to get to this level at 1620 within this market right now as we speak, based on, and this is based on, tonight's analysis. Here we are back to the levels. Let's talk about them. What was once support in this market as well has now become resistance here at 1689 right here. And support to the downside sticks at 1678.25 and again 1678.25 and then again to the downside. The lowest level we have laid out right now at 1664.75. Looking at the indicators here, again, I want to make mention of one thing that I didn't cover. When we're making a relative comparison between the Chaikin money flow longer term and the shorter term money flow index, it's important to understand that we need to use two in our trading. The reason behind this is because according to the chart pattern setup, based on the inherent volatility that's created it, as compared to what the smart money is doing in the form of the graphical representation behind the indicator formulas, it's very easy to discern what's the reality of the future directional price movement for the next 3 to 5 days as compared to using only one. Okay, so there we have it. Now, getting into real time, still we have a lot of information to cover here. Had 3 trades. The first trade I got into and stopped out right here, right after the market opened. At this time, the indicators were negative. And where we are at a short level 8 in the market, I had no problem with believing that the market could tank down further than this level right here at that time, and this gap would never get closed, because historically it has happened, and it's happened many, many times. Now in this case it didn't. It became a shakeout. So after the shakeout was realized for what it was, the call was to be long at the right time and at the right place. So after the shakeout is established, now we have a strong positive divergence as compared to that shakeout, and we're looking to get into the right place at the right time. That trade, as it happened out, took place on the 1-minute chart back here, right here. Here's the shakeout that took place. I got stopped out. Prices traded down. I thought, okay, this is going to be something of an event. We're going to move down 20 points today. It never happened. The shakeout completes itself here. I'm out with a ½ a point loss. That's it. And then waited for the long move, getting through this level here that was established after the run-up. Indicators had a chance to reform themselves, and we're in here at 1674.25 for 30 contracts, and out right here on the turnaround at 1677 right here. Now, that's trade number 2. Here, as we move into the future and waiting for the sell-off to take place, we finally have an opportunity to hit the afternoon sell-off here. This level at around 1675 was clearly laid out on the 15-minute charts across the board, especially here by these 2 prices broadcasted out. A trend line violation here was an early warning the prices could sell off, and sure enough, they did. The support level at 1675 intersected with the trend line right here. That's no coincidence. Waiting for the final blow off here from this low and this high to fill the gap. Prices turn right back around, the indicator fires to the downside, and across the board, if we look at everything, negative divergence, falling off, falling off, falling off, clear to go, and again, firing here before the level is ever broken to trade short right here. So short again for 30 contracts is 1675 at 15:05 hours right here, and out at 1672.50 at 15:18 hours within a 1-minute bar with a net gain trading 30 lots for $3,750. So for the day, a very busy day, if I may say. A net loss on the first trade of $12.50 US. Trade 2, long 30 contracts, gained 2.75 points for a net gain of $4,125. Trade 3, short, net gain 2.50 points. You saw the in and the out, 2.5 points times $50 for every full point move of a gain, and this market is a $125 net gain per contract times 30 contracts traded was $3,750 net gain on that trade. The sum total of trades 1 and 2 right here, excuse me, that should have been 2 and 3, are $7,875 minus trade 1 with a loss of $1,250, Still left an incredible net gain for the trading day of $6,625 even. We'll see you tomorrow on the next Nightly Market Intelligence Report. Good night.